The following is for entertainment purposes only. We are not financial advisors. We are not responsible for any losses, only the profits.
Octo Nation, what a Friday we had, man. It was kind of rocky, right? Some stuff was way up, some stuff went way down. Okay, got faked out in silver. Y'all see that? Man, looks funky. We'll take a look at it later, but I think this is a good time to look at more gold and silver. Why? Because gold and silver is still kind of rocky and doing that. Okay, so let's get it while it's not cool. So we're going to dive into two here that I've been wanting to do for a while. These are two new royalty companies. So what this means in the gold and silver sector is these guys will either buy a piece of property or lease a piece of property to another miner to come in and do all the rest of the work, building the mine, setting it out, or these guys can build the mine, still run it out. They come up with like a package. So many look at this as the way safer play to invest in the gold and silver mining sector because let's say one mine collapses on miners, they still have X amount left that they're still bringing on income, so you're not reliant on one mine, you're reliant on many mines. So it's good to diversify always. These guys obviously aren't going to make as much per one mine they have, but it's a safer play. It's usually not as volatile as like some of the the one mine operations can and will be. But I think these are two good plays. They actually both just got released here within the past couple months, and no one really knows about them. Only not that many people do. So good time to get in. We've got super low float, so these can go super parabolic. You'll take a look at the jurisdictions on them. One is going to look a little bit better than the other, but I went ahead and jumped into both. Let's go ahead and dive on in. First one up is Elemental Royalties. Ticker is ELE, the TSX. So these guys currently have 5 producing royalties and 1 development royalty. So that means they got 6 total places that they can pull metal from, and 5 are already, the full thing is going. The gold and silver are already pouring out, okay? And 1, they're still in the developmental stage, but once that's done, they'll have 6, and then they'll usually get another property, and they just start stair-stepping up. All right. So the ground floor investment opportunity into newly listed cash generating gold royalty company targeting near-term growth, 5 royalties, producing mines, 1 development, experienced management board. They hold 26% of the share capital. You hear that? 26% insider ownage. That's huge for any company, and that's fantastic. Why? Because these guys are going to do whatever they can to make sure this thing rips because they're 26% into it. That's massive. So strong institutional holding, 30%. Members of Discovery Group, y'all heard of them. Eric Sprott talks a lot about them. They're in, and they're also backing of Timbo Capital. Asset operations by high quality companies, 85% of the portfolio revenues weighted in gold, 4% silver. So this is a heavy gold play. Future increase in reserves and resources delivers additional value to Elemental at 0 cost. So they got a clear strategy. They're gold, established operators, track record with reliable cash flow. The management is focused on growth and they're easy to scale model. They got low overheads, no funding commitments, funds available to reinvest. They got money to move around. They're geologically diversified, which has reduced risk. Exploration upside free. Many assets produce beyond original lives of the mine. So you can tell here's the graph, how much gold, 85%, 11% mineral sands, 4% silver. I would like to see more silver, but gold's still fantastic because, silver's got a lot more to go, but that's totally fine. So 98% of their stuff out there is producing, which is huge. Here's the brands, Teranga, Zijin, Australia Gold, Panoramic, Base Resources, and Premier. And here's a fantastic map they made up. So it looks like they've got 2 in Australia, which is like tier 1 jurisdiction, one of the best places to come. Then the half the management is there, the rest is in Europe somewhere. Then we've got 2 in South Africa, and 1 it looks like in Chile over here. And sometimes there's some political risk definitely in South America and Africa. So these aren't going to be tier 1, but regardless, you can pull rock at a lower cost. So, it's good to have a mixture of those. You got the tier 1 over here, and then you got these over here, but then they also got Mexico. They've also got some of the management up in Canada. So that's pretty good. So here, this tripped me out. There's only 41 million shares out there. 41 million shares for a royalty company in this sector is so low. This might be the lowest shares out there for royalty company. Let me know down in the comments if I'm wrong, but there's one that just launched like 6 months ago. I got in, and they launched around $1, and I think that their shares were like 879 million or something like that. So this has only got 41.9 million shares. So a lot easier to go parabolic on this baby. So they've got, we've already taken a look at that. Management and directors, they're already title shareholders. They're just showing what they're doing here. They're continually evolving. They're looking to get, they just got on the TSXV listed on the TX Venture Exchange in conjunction with, 24 million fundraise. That's what just happened there. So we just got on. Ideal platform for growth with a base of 5 producing mines. They keep repeating themselves here. So this is showing that they're producing focus, majority of the value attributable to producing assets. So they're comparing themselves to Franklin Nevada, Wheatland Precious, MMX, SSL, or an MTA. They're saying that their percentage of actually bringing in money is way higher than pretty much anybody. So most guys, like down over here, or in SSL and MMX, have about 66% producing, 41%, 6% producing for MTA. Wheaton Precious only got 76. Now, take this with a grain of salt because they do only have 6. We're like Wheaton Precious Metals, Franklin Nevada. They've probably got, I don't even know, 100 mines or something. But those are also way more expensive and way bigger. So the future increase in resource reserves over district scale license areas can continue to deliver value to Elemental at zero cost. So they've got basically mines, that are set up, but they still haven't explored the whole area. So once a mine starts, they focus on one little tight area. They've only explored that little area, and they're going to continue to explore, and they continue to get more and more area and more gold and silver, which increases their value, which is fantastic. Revenue growth through existing royalty profile. They're just showing that they are absolutely growing positive, and they're slated to next year go up another, it looks like 25%. I'm sorry, by July 2022 is what they're saying. In 2 years, they're going to go up another 25%, which is fantastic. Strong growth pipeline. They got 3 royalty operating. Pre-RTO acquired 6 royalties, built database and industrial relationship. Exercising deal pipeline. Listing company, lower costs and capital versus private company, which is fantastic, because they just went live. And then, being part of Discovery Group is good. I've never heard of Timbo Capital, but Discovery Group is a brand. I mean, they've got lots of branched mines underneath them, so people know it. So I think once people get a hold of this, they're going to be like, dude, these guys are sick. This is going to be a good play to get in. So it's good to have them in the backing because they can, knock on their door if they ever need money or hype or whatever. Like, dude, put us on your front page of your website or put a tweet out or whatever, that all helps. So Elemental can deliver multiples of cash returns to counterparties by offering equity, partnership, and transformational portfolio deals. So it's showing here that Pan American Silver on July 2016, they have 13 royalties, and the acquirer share price gain was 505%, which is huge. So they're just showing again that they've got tons of room to keep rocking here. Strong peer performance following the listing. They're showing Maverick Metals and Metella Royalty. They're comparing themselves to them. They showed, so this is months from listing. They went up an average of about 600% in a matter of 4 years. So that's quite a bit. Maybe 100, 120. Let's see. The first year they actually went up to 300% their first year, these guys. So, I believe that's totally possible. What does that mean? It's 3x our money. Let's multiply, right? That's what we're here for. So producing royalties, again, it's showing that these guys in gold they have way more producing mines than these guys. Like Mavericks, they've only got 2 producing mines, and look at what they did. And then Metella, they have 1 producing mine. I actually like Metella. You get sold on it, and then you find out they only have 1 producing mine. You're like, oh, why don't I just buy a regular miner, dude? Come on. They have stuff in the works, but still 1. When you could jump in on these guys that already have 4 ripping, so that annual revenue on the listing Again, this company is literally like over 5x Metella, all right, which is crazy. And then Mavericks Metals, they're like, about 40% higher on revenue already coming in, which is crazy. Market cap, Mavericks got them double. ELE is, about half, and Metella's, a quarter of that. So this is basically just showing that compared to these guys, this is a great setup here. They should be able to at least match this, if not even go way more parabolic, number one, because annual revenue. All right, if these guys are already set to 2x these guys, they should be able to 2x those positions. And we lag those multipliers. So royalty company outperformance. This is comparing the royalty companies versus the GDX, which is the gold miners equity ETF, which is low and slow and safe and boring. That's why I don't trade it. And gold, okay? So it's showing it in this gold ticker here. This is actually the royalty index. So it's saying royalty companies, how much they whoop compared to just regular gold. Dude, 654% on average versus 245% for gold. And then, GDX is way low, 94% over 10 years, 15 years, 12 years. And much of it being in the royalty space. Can you see why? Multiplication, that's why. The management all seems pretty much on par. The head CEO, he's a young dude, but he's one of those guys that he's got something to prove. And those are the guys I like, the ones that are like, dude, let me prove this. They got fire in their belly. They're not, already burnt out, don't care. So they got good management. They're set. Ground floor investment opportunity, get into a growing gold royalty company. 98% of NAV is in producing mines. Keep rehashing. Leave this down there. Let's pop over to the next one. This one is Vox Royalty. I love iceberg pictures. Isn't that cool? Let's take a look at what we got here. So these guys were established in 2014, patiently built unique intellectual properties, technical team, and global sourcing network. Low geopolitical risk. 75% of assets are in Australia. Yes. Industry leading growth. 16 transactions in the past 18 months. That's huge. They made 16 transactions. That's like one every 3.5 weeks they've made a transaction, buying mines. Like, hey man, you want to lease this out to me? Okay, cool. Give me your money. Go ahead and build it. We ain't going to take any risk there. You go for it. Critical mass of 42 royalties and streams with significant near-term organic growth catalysts focused on precious metals and production stage royalty assets. Deep pipeline of value accretive royalty acquisitions. So these guys are ripping too. I love these guys. Share price, we got Canadia. They're in Canada. They're at $2.99. These guys, listen to this though. I was already proven wrong. Their shares, they've only got 32 million shares out there. Are you kidding me? Again, insanely low. In the whole precious metal space, that's stupid low. And then for a royalty company, you nuts. Only 32 million. This thing goes absolutely bonker parabolic. That is fantastic. They got 8 million Canadian. Okay. How much debt they got? Nil. Nil. Management owns 15% of this, that's great too. Usually it's like 5 or 4 or 3. 15%. Institutions and family offices, 33%. That's also good. Precious metal weighted. So this is kind of cool too. So precious, 64%, 17% battery. So you're getting some battery. You're getting base, like your zincs and your bulk, sandy stuff. Low geopolitical risk. 12% other, 76 Australia, 7% Peru, 5% Canada, the USA. I know I'm pronouncing that wrong. I hope I'm not making anyone mad. I got friends in Canada, all right? All right, exponential growth, organic growth. They're slated to grow over 2x of producing mines next year. So right now, it looks like they've only got 3 producing mines, but they're saying by next year they're going to have 7. So that's fantastic. So the management, they're all legit, all right? 10 years experience, royalty acquisitions. Team highlights, royalty specific deal expertise, 30 years combined. Investment industry professional with financing and advisory experience, an additional $1 billion of metals and mining transactions. Local experts in their area, Denver, Grand Cayman, Toronto, West Australia. Full-time CFO and general counsel enable efficient tax and legal due diligence for rapid deal completion. I hope I can hire a full-time CFO sometime. I can't stand doing that stuff, okay? All the confusing tax and the legal and the, all that stuff with all the stuff to make money. Yeah, can't wait. Management team of 6, all focused on business development. One of the largest deal sourcing teams of any royalty company. 1 billion market capitalization. That's pretty big. 1 billion. Most experienced team of royalty experts of any emerging royalty company. That could be true. So you got leveraged commodity prices, fixed operating and cash costs, strong margins, exploration and mine expansion upside at no additional cost. It's like the one we were just talking about. It can keep getting bigger and bigger. This is, again, kind of the same index, just showing over 10 years royalty companies way outperform all the other boring ones you can jump into. No capex or cost overrun exposure, no limit to growth as execution risk does not rise with each acquisition, no dilution. No dilution is huge, especially in this sector too. When a lot of them want money, especially right at the beginning, what do? They dilute the shares. That's why one of the reasons why they have such high share count, all right? But these guys are nothing. It's ridiculous. Royalty company index share price appreciation, it's showing Franco-Nevada increased 900% over 12 years. Wheaton Precious Metal 1000, Royal Gold Inc. These guys are good too. 2,500% increase in 20 years. Not bad, huh? Not bad. Extraordinary growth set to continue. Critical mass achieved. Executing on full pipeline of opportunities. So I really like this. 16 transactions and 37 royalties contracted since January of 2019. These guys are ripping, dude. They're rocking. They're out there to prove. 37 contracts contracted, and 16 are already done. So these guys are just swooping it on up. Highly accredited transaction history, unique sourcing capability resulting in royalties, producing and near term. So remember on those, the single miners that we've done, we show that graph of it's super sketchy to buy at the exploration stage because you don't know if they're going to get a good drill result or not. So it's super sketchy. And then it dips back down, it gets boring for a while, and then it starts going back up. Right when it starts going back up, that's what these guys are saying. They try to they're either producing or near term, right at the honey hole stage where it's on the last rise up where you get the big pop. So that's fantastic. Pipeline fuller than ever. Significant transactional momentum expected to continue for the foreseeable future. Currently evaluating more than $500 million worth of additional royalty transactions. So they're swooping them up, targeting 80% of capital allocation to production or near producing stage royalties. Pipeline driven by a proprietary database of 7,000 royalties and global team with reach into multiple local markets. Unreal. So here's their proprietary database they got. Kind of curious about that. Inherent competitive advantage from unique properties. Let's dive into this. So Vox entered into an agreement to acquire Mineral Royalties Online, MRO. In 2019, the acquisition included a proprietary database of 7,000 global royalties and 500 historical royalty transactions. MRO founders elected to join the Vox management team, adding experience and involvement in almost 1 billion in royalty transactions. So that's cool. They bought out the company, and then the dudes now work for them too. So I like that. Acquisition yields wider transactional opportunities, provides Vox the first mover advantage to execute bilateral and non-brokerage royalty deals. Cutting out the middleman. These guys can just slice right through it. They got Jim and down Malu's number. Okay, they can just call them down and say, hey, want to sell your ranch? Like, not the mine. Well, we actually just want the mine. Okay, we'll say the mine, but we're keeping the ranch. The database of the historical transactions benchmarked over a 40-year period enables Vox to provide royalties faster and more efficiently than competitors. Track record of sourcing and completing royalty deals with unconventional sellers. Example, telecommunications company, hearing aid company, and auto parts retailer. So kind of broad. That's good to bring, different avenues in there. Royalty database, for example, Calgary, Australia, visually integrates global mining royalties green below with mineral deposits red and mining claims black lines. Looks like a ton of places to mine, huh? Enables Vox management to evaluate and prioritize thousands of royalties at a fraction of the time. So they got some cool software and the dudes who built the software. That's dope. I like that. I've never heard of anything like that. Portfolio. So it's showing where they're at. I mean, they got Royalty in Montana, Yellow Giant, which is in Canada, Mexico. We got Peru. Looks like some Brazil. All over Africa. And then check out Australia. Blazo, look at that. So again, all sorts of different metals bringing in. This is showing how they're going to keep popping, for the years to come, which is fantastic. Keep pushing. Here's some senior producers they got. They got Newcrest Mining Limited, Northern Star, Hannock, intermediate producers. Wow, Saint Barbara. I always want to call that Santa Barbara. You ever been to Santa Barbara, California? Cool place. Saint Barbara, I believe that's Australia. That's a good one, dude. I didn't know they were in that. Gold Road, Sandfire, Explorers. We got Thor, heard of them. Jindalee and Silver Miners Limited. Oh, and then Val Orr, part of the Discovery Group. See, Discovery Group's a big old spider web. That's cool. So significant embedded organic growth and near-term catalysts expected. They've got, let's see, in Australia, iron ore producing mineral resources for Deception deposit. Okay, so they're saying they're bringing on another 1 to 1.5 million in more potential. Operator completed study to expand the iron ore, which is great. Then they've also got in Nigeria the gold construction. They're just finishing construction on a mine, it looks like here. Yeah, first gold production to be expected in Q2 of next year. So that's fantastic. That's like 6, 7, 8 months away that they have a whole nother revenue, and they've got a 1.5% stream on that, which is pretty high. And then in Australia, they've got a silver development, which is great. Feasibility stage project with forecast 16-year mine life. Wow, production of 52.9 million ounces of silver, zinc, and lead recovery metal. So that's coming in here soon. 1 to 1.5 million again. It just keeps going and going. Australia Gold bringing more. This one's going to bring 2 to 4 million coming in. I don't see a date, but okay. Royalty cover 2 million gold ounces, potential $2 million to $5 million incremental value just on these three. Oh, these are in pre-production. This one's producing, and this one's in exploration. So they've got massive growth that's planned and already rocking. They've got 15-ish deals in the pipeline that they're trying to close right now. So YVOX, unmatched team, critical mass, industry-leading transactional growth, acquired qualities, royalties. Why now? Attractive valuation with tangible near-term catalysts. Vox expects to continue to close significant, highly accretive royalty transactions this 2020 and beyond. Significant cash flow. Portfolio, 42 royalties and streams, have numerous organic near-term development. May 2020, they got listed. So actually a couple months ago, whatever. But, just go through and list them all. Look at this, dude. It's crazy. All right, which one do you like the best? Which one do you want to jump into? Can you guess what I did? If you guys know me, I jumped into both. Yeah. Let's take a look at them. So Elemental Royalties. So, this one launched in the beginning of August. Yeah, so like 2.5, 3 weeks ago. It basically launched around $1.30-ish. It's now sitting about $1.33. So it's been all the way up to $1.43 at the top and been about as low as $1.30. So it's just kind of riding that channel here so far. It's had some decent pops, some bigger volatility coming in. But again, once I think the normal retail investors get into this and actually even hear about it, because I just heard about it, a couple of weeks ago or a week ago or something. So it takes a while for the brand to get out there and for people to know about it. But these guys need to get on YouTube, okay? They need to start pounding it and doing interviews and pounding the street, and I'm sure they will. But regardless, once this takes off, these will be parabolic. 41 million shares. Are you kidding me? For this? So anyways, I jumped into this baby, and then let's take a look at the other one, which is the Vox. So this one launched basically the same day, August 4th this year, or this month. This one launched it about $2.10, and is already went up to 250. I got tagged in up here at 240, and now it's down to 231. Yeah, so it's going to be jumping around a little bit because, I mean, look at this, 32 million shares. So do keep in mind, with the low volume on these, that it's kind of hard to get in and it's kind of hard to get out too. So, make sure you're not trying to buy these blindly. Set your stops and your limits on these when you're buying in and trying to come out. But just these are ones you want to kind of get in and just kind of let ride. I mean, they're they're so low right now anyway at 32 million shares at only, $2.31. So what y'all think of them, huh? Let's move on to something else. So like I said, precious metals kind of tanked. Basically everything went with it, right? Except for Rain of Silver, which I thought was very interesting. This was one of the top 5 I picked for juniors the other day. Rain of Silver held out and finished the day at $6.61% up on the day. So people believe in this one. It's got the brand tied to it. I believe it's Pan American Silver. Was it? I think it's Pan American that's tied to it. Anyways, I mean, this channel looks so healthy. So this is a good one to get in. I mean, dude, I can't believe it ended that green out of most of the miners I have up here. Let's go down below to the rest of the market. Let's check out some meat. SPY, it came back up. It hit the all-time, sliced through all-time highs, came back down, did a fake out, did a bear fake out, and then slapped right back up and basically hit parallel where it was again at 339. Looks totally bull. Right? We're still totally riding that all-time high. I guess it hit all-time high again today or yesterday too. So fantastic. QQQ, the clutch of the market. Yeah. What does that look like? The same thing it's been since March. It's going nuts. There is no sign of pulling back. The dollar did a little fake out today too. This basically that looks exactly like what silver did. So dollar kind of rode up. It's still riding this big old monster channel here. So we're still fine. It didn't break anything. Still riding it, but guess what? It came up. It's coming back down. It's going to keep going down for a while until it decides to skyrocket with TLT like here. So again, this is these 20-year bonds we keep talking about. I said it's going to break here. It's going to break up. I think it was yesterday, and sure enough it did, broke up. I decided I actually zoomed out, which I can always do more of, and I found a line here that I actually want to wait and cross until I jump back in. But it's been tagged multiple times and used on the up and the down, and I want to wait until it crosses. It's like 166.50, so I'll be at like 167. If it's 167, it's going 168-ish. So at that point, I'll probably buy like a 50-cent call or something above, buck over, maybe something like that. I don't know. We'll see. But regardless, this had a nice candle up today, and then it created another channel and started consolidating. So that's a healthy rise. That's healthy. Let's see what it does on Monday. Silver, look at this fake out it did. You see this? It was riding this channel just like we were showing here, and then it decided it wanted to jump out like it should, and it jumped out, and then it just did this nasty fall, nasty waterfall. But people picked it right back up. It actually tagged the line. Well, I went slightly below it, but it still looks bull according to indicators at least. So at this point, I would definitely like to see this, get up a little bit more, around 27 at least. But before I go heavy again on silver, I'm going to wait until it crosses this massive line here that we need to get over, which is 27.50. But I'll probably wait till like 27.70 until I'll be another buyer into big, probably AGQ, which is the 2X of silver. But the miners, you can get them on days like this, when the silver's down a little bit, because they're cheaper. Get them when they're not cool. All right, we got the gold. Kind of did the same exact thing to silver. It broke. It kind of looked like it was going up, and then it faked out, dropped. In fact, these lines look almost exactly the same. Kind of makes you think that computers and bots do this, huh? I think so. All right, dude, Highcroft mine, man, that thing went down to $1.45 today. Excellent time to get into that baby again. It loves around $1.50, so that's great. We've got a super strong line now that we've been writing for since like the 10th of this month when the Q2 results came in, and I was like, I'm buying that. Okay, so CLSK, we got clean spark. So just like we thought, it was so parabolic the other day that I wouldn't be buying in then because it's probably going to come back down, and it did. In fact, it gapped down. So did you guys take profits here? I hope you did. If not, it'll probably hit back there again here pretty soon. This company's still going to be growing, but it did create a decent buying opportunity for people that wanted to. I think it was down maybe 8-ish% at total today, but it ended at 1.33 up. So I'd like to kind of see this consolidate a little bit more, follow this kind of channel here, the length of this. How long was this? August 11th through the 18th. We've got about a full week. So I'd probably wait till maybe, Tuesday, and if it's still in there, buy a tiny bit above it, try to catch it up. PPSI, this thing was actually up, I think 9%, 8.5%, 9% today. It's one we talked about yesterday, kind of the complementary, the little brother from another mother of Clean Spark. If you haven't seen that video, check it out. Plug, this is one I've been, I got a video I've been working on for this one, get the script on out. But, this is one of those power plays where it's kind of like external power helping with green power and battery storage type of plays. It's a cool play. I think it's a good place to kind of get in right now too. Kind of looks the same, it came up, it hit 1434, and it's starting a decent consolidation around 13. I'd like to see it consolidate a little bit more, but this thing is one of those low floats that, it just, look at it, it's just climbing, right? It did have a nice down here back in the end of July, so look out for that, because this last run was extremely parabolic. In fact, I bet you it's the same amount as this run. Let's find out. 55.8. Oh, close. 48.929%. So stuff usually likes to repeat itself. Even with this, I mean, you can see this little hook here, this little button hook. Do a button hook. I'll throw you the pig skin. All right, button hook, pig skin. Grab the pig skin, run for the touchdown, come back down. It's going to do a little button hook. All right, it's probably going to try to ride a little channel down and follow what it did here for about a week. So I'd kind of wait on this, see what it's going to do. If you see it doing this again, it looks mirrored. It's probably going to do what? Boom, take off again. So watch that. If you want to be safe, I'd put in a buy, about 1357, 1350 to try to ride it on its next leg up, which would be sick gains at another 48% if it could do it. That'd be super dope. UAVS was on the buy list yesterday. So I didn't see any news come out, but maybe did. Did I miss it? Let me know. But we actually had a gap up today, which was crazy, So again, we are good. And Workhorse, it's just riding that pipe, right? It did a little button hook, a little fake out, but again, if you're gonna get into this, I'd wait till we get above. Where would I wait? You'd wait till you get above this right here. It's 1967, so you put a buy in. I'd say around $20.50, something to try to catch on this next move up. Or if you're super bull on this, get in. But just keep in mind, if that USPS contract does come back and they don't get it, this thing is probably going to tank to oblivion. So protect yourself and put in a sell. If you want to protect yourself, I would personally do it below the lowest dangler here, lowest dingleberry. That way you don't get faked out. Put a sell in or whatever you can manage for your own merce or purse. I would say around 12.89 is where I'd personally do it on that one. Other than that, SPACs have been bleeding. It just is what it is. They're officially, it kind of in a bad spot. They got pumped and dumped, and people got too much money, and so the big boys brought bots in more heavily with more money, and so it's been kind of tough. Fortunately, SHLL is showing that it is possible, okay? Because SHLL, Mr. Tortoises, have been ripping. Look at this fantastic bowl of soup here. All right, this is fantastic. If we come back down here, this is a possible. I think it's called what's it called? Tea and cup pattern or whatever. If this comes back down on Monday and does a little leg down here around to like 25.42, and then kind of consolidates, that usually means it's going to then go parabolic again. I still think that this is probably going to go up. If you can get the warrants on these, I think those are still probably a better deal. Do we have an $11.50 strike price on this? Let me know down in the comments. I don't actually know. So Neo's, kind of going up a little bit. I don't see anything. Oh yeah, MPAA had a 15% pop today on the warrants. So again, on these SPAC warrants, once they're getting around 80-ish cents or 50-ish cents or whatever, with the big name ones, you are going to see some big and big spikes going up and down. So you can, again, still day trade a ton of those. So keep those in your back pocket if you would like. What is this? Oh yeah, this is the one I've been meaning to talk about for a long time. So this is Green Power Motor Company. This is kind of the Proterra, like the green buses for city municipalities. And they also have I think they have another car or something too. But anyways, these guys are in Canada, our friends of the North, and they just released on August 19th, I'm guessing right about here, that they are going to be listed on the, I believe, New York Stock Exchange. So right now it's a Canadian held stock, an OTC. And so what that means is once Americans can get into it, on the smaller platforms, I don't even think Robinhood you can buy OTC, right? Yeah. So once Robinhood can get on this, they're probably going to jump in and it'll keep smacking up. So people are betting on that. No matter what, that's huge for a company though, to get dual listed, get listed on multiple different places. That's absolutely fantastic. This is a cool play. They're big. They own, I think most of the market in Canada, and I'm sure they can look at going to other places too. So they seem like a pretty rock solid company also. So take a look at them. Are there any other plays you guys want me to take a look at or want to specifically dive into and make a full video about, or any weird questions I can even make a video about? Let me know down in the comments. And even if you don't know what to put in the comments, just put something because it helps us out. Okay. Of course, leave us a thumbs up. I really appreciate it. I'm sure we'll see you for the rest of this weekend, but everyone have a good Friday night. I'm going to go get something to eat and go to the gym. Take care. See ya.